little song. Hello and welcome to Weekly Open. I'm Brian. We got everybody on the show today. Excited to talk about markets with you. Thanks for joining us. Let's get to it. Don, Cred. Don, you're on the left. How you doing?
Good. I mean, how could you not with these kind of 2 weeks behind us? How are you doing?
It's a new paradigm, man. Just go from peak bear to peak bull. Getting whiplash. Cred, how's it going?
I feel like Don always ruins these shows with his charts, the annotated ones, because they kind of just cover like a reasonable view of the markets. You might as well just call it a day after that. He did it on the daily time frame with the Future of France one. Now he's done it on the weekly again. So like, what's the point?
Does it count as a view if somebody watches the first 10 seconds?
Yes. But yeah, doing well. Thank you.
Good. We're just talking a little bit about the show, how it's kind of a strange market. Like pretty much what you might expect to happen at any given time seems like by the time it feels even remotely consensus, the narrative changes and off you go somewhere else. So the responsive market participants seem to be the winners, and we're debating whether it's a trader's paradise or a holder's market. Don, you've been holding for weeks now, so obviously
Yes.
very happy. Do you want to give us a rundown of the market?
Yes, I can. I mean, I'm the reason in the pre-show I talked with Brian about this, like holder or trader, and the reason why I'm saying holder is because I am one. I'm quite happy with it right now, anyway. But I think there's a few things that you can trade that actually just outperform flat out holding. It's just always a risk to reward kind of thing. I feel like the risk that I took was very limited. And when you're buying like the hot potato of the hour, it's a little bit more risky, but also you obviously get much more in return. But with like in regards to Bitcoin, I think it's quite straightforward. As Cred said, as long as you're trading above this rip zone here, so anything above this green box, I think we're okay. This is basically the turnaround. We've made a new high, the first one in a long time. So we broke this high, we closed above it last week. That's really, really good news. We also closed above this one. So we invalidated both of those highs, right? We've been on a steady downtrend. The last time we've done any of this has been the Luna push-up. If you guys remember, Do Kwon buying a bunch of Bitcoin. That broke market structure back then, but that was basically because it was just very unnatural buying, I'd say. Since then, it's been pretty much straightforward to the downside, right? We've just been down. If this didn't happen, very likely would have just been one here. And then this is the first time, for me anyway, the first real time where we've actually made a new high, which is really good news, right? This is what a lot of people have been waiting for. I still think all of these people that have been waiting for this just kind of coping about how much this is up, and they still don't want to buy. So we kind of have to get them to buy somehow. Best case scenario would be by going further up.
Forcing them back in.
Yeah, I would like to see a bunch of sideline people forced back in. We've seen a little bit of that, but I haven't really seen too much of it. As an anecdote, I've gotten one DM so far that asked me, hey, I've been shorting all this way up. Where do I buy?
Oh boy.
And that was yesterday, the first one. And I've gotten a bunch of people asking me where I would take profit, where I would short, whatever. So take that for for a sentiment check. It doesn't really change anything, but it's just interesting. It's just one person that's like, oh, I've got fucked. Where do I buy now? But yeah, in general, as long as you're trading above 19K, looks good to me anyway. The danger zone is kind of where it decides, like if we dip in this, a lot of people are waiting for low, like mid 19Ks ish for a dip buying opportunity. I would like to not give it to anyone. I would just like to, best case, honestly, just going sideways here for 3-4 weeks. And then straight up again. In my opinion, that would create the best structure. But yeah, we could also just pull back. I just don't want, like, I prefer not to. But yeah, if you see a pullback into the danger zone, that's kind of where it's decided whether this is actually legitimate or not. I think it is. That's why I'm still positioned. That's why I'm holding. And I think the moment we start going through 25K, even the very late ones, the people on the sideline will want to join in because they're like, fuck, this is a significant swing high. If we break it, there's no real resistance until 32K. And I think a lot of people would want that leg at least. So I could see a bunch of people come back in around 25K if we manage to break it.
Being
That's
a significant swing high also should indicate that it's a significant resistance.
Yes.
Prior to clearing. I think a lot of times, myself included, something gets there and then I'm like, now's the time to buy right here at resistance. But what you're saying is it looks amazing above that line, not.
Yes.
Yeah.
But I think really, even right now and even heading into that resistance, it looks good. Like, I wouldn't want to be bearish into that resistance. I've seen a bunch of people looking for their short. I don't really get it, right? As I explained, like, this is the first, for me anyway, you can say it's the second one. I don't really care, but it's the first time we broke a high on the weekly since the all-time high. That is a significant change in behavior, and one that I wouldn't take lightly, especially given, and this is something we've talked about at the lows, we've had a shitload of bad news, right? So in comparison to this one, this was good news, basically. I mean, wasn't really. Luna buying wasn't really good news, but it seemed so at the time to a lot of people. This was good news that got faded. This is bad news that got faded, right? So it's the inverse. It's a good signal to me. Nothing better than a bottom on bad news.
Yeah. So. Do you think Barry's a little sad that his bankruptcy announcement resulted in green candles?
I could see it.
Just saying, you didn't matter very much. I'd like to highlight just something on my radar at the same level. I've mentioned it every week, so I'll do it again. That exact same level is also where that 200-week moving average is shaping up. All the legacy index stuff is also kind of battling their 200 weeks. So we're basically right in line with all of them, although some look much better than others. But nevertheless, that's where Bitcoin lines up from a resistance perspective. And I don't know, my gut says that this trade gets way harder over 24K. Sometimes that just means it needs a more consensus blast through. But my anticipation would be if this week or next, if we continue green candles, that it'll find some kind of hesitation in that zone. Or at least that's where I'm going to be looking to be more conservative. And I think it's possible we spend a lot more time in that 20 to 24K range to prepare for whatever's next, either a failure of it or continuation. But just wanted to bring up that kind of key moving average is also at that same spot that Don's been highlighting.
Yeah, there's a bunch of mean reversion stuff there for sure. I also feel like that the only reason Don does any kind of podcast, media, Twitter is just to make people feel bad. Because if you listen, the consistent thread throughout it is my entry is really good. Best case, no one gets an entry, not allowed to trade with me. And when they do finally get an entry, it's going to be at the Pico top at the worst possible price where I get my exit. Yeah, it's like, okay, thank you, man. Jesus.
I mean, that's the narrative I've kind of made up for myself for this market to go up. Basically, sideline people getting completely fucked. So it kind of has to play out that way for optimum outcome, in my opinion. But we'll see. We'll see.
Cred, do you generally agree with these levels and therefore the responses?
Yeah, the levels are good. I mean, that danger zone looks good, looks amazing, is pretty reasonable. I mean, if you consider why the labels are where they are, it makes a lot of sort of technical sense as well as narratively. Danger zone is like you start to retrace a large part of the momentum and the 20K handle, that's why it's dangerous. The RIP would suggest that, the breakout wasn't real and went back below the summer range, and that's disastrous because we didn't build any meaningful structure at the lows that's worth rebidding, in my opinion. So if those lows weren't the deviation, then good night, basically. Looks good, takes place above the first significant shift in market structure, which is why it looks good. And then looks amazing would be the market structure shift and continuation through the top of last summer's range, which is a strong indication of momentum. And the future of France and finance stuff is the old 30 to 60K range. So I mean, all of that is pretty reasonable. I can sort of screen share real quick because I agree with you, Ledger. In the sort of mid 20s, there is sort of some stuff to be aware of. I mean, this is the chart that I've got with my labeled levels. You can see at the moment, my fingers are too fat to click, but the monthly kind of level I've got is at 23.3-ish, and the daily one is at 22.6, and that's sort of where the lower time frame consolidation is taking place for the time being. I would be quite surprised if this resolves to like a big puke back into the daily mid-range. I think you'd have to trade that essentially. You know, if you're looking for a visible high time frame pullback, as Don and I discussed elsewhere, there is like a cluster, basically the pre-breakout consolidation around 20K. And that would be definitely kind of the first port of call if the market starts to pull back. That in itself would look kind of garbage, to be honest with you, because it would entail a retrace of this entire move. I mean, you know, you would have to battle what level is the market reaching versus how bad does it look to get there, and that's sometimes a pretty tricky balancing act. But in terms of like bigger picture stuff, a visible pullback for me at least has to hold sort of 20.7, 20.5, that sort of mid-range level. Because otherwise it starts looking a bit too retracey to my liking, at least on this time frame. And then if we go on to the weekly, I'll open up a fresh chart for this because I'm making a sort of broader point. If we go to the weekly time frame where you said those mean reversion targets are with the 200-week and a bunch of other stuff, essentially, I think you can quite reasonably just say the top of that range is some version of 23.2 to 24K, like this, basically, and that's where the relative risk to reward of following momentum after the reclaim becomes like slightly less attractive. Like as the market pushes, into here, if there's going to be any type of really scary down day or retrace or, some sort of shakeout, for lack of a better term, I think it's likely to take place from this weekly structure, which, we're basically trading at now, and we'll probably spend some time for the coming week or so. But yeah, aside from that, I think, if we do break above that range and get accepted, because again, I always think of what would look really ugly. For example, the move that would break market structure here, and a lot of, let's say, that sideline money piles in, and then that ends up being a failed breakout, right? Whatever this attempt to break through the range high, if it ends up being unsuccessful, that would look pretty garbage. But assuming some sort of acceptance or lack of failed breakout at the summer range high, I think we just go for the memes, basically, from one range to the next, where it's the kind of 3AC gap, lunar, summer, whatever sort of 30K handle would make sense. But I think in terms of, given this is a weekly show and all that type of context, we've had two very big kind of strong momentum candles that cleared a lot of important market structure levels. I think the relative, how attractive that trade is, at least on a risk reward basis, kind of decreases in the next 1 or 2 weeks, just because we finally start pushing up against the top of the range for a change. So at least have some sort of roadmap for what's below you if you start getting some scary looking candles. I think there'll be some good trades there.
The market dynamic seems to be changing a little bit between ETH and BTC. ETH cleared some of these hurdles a little before Bitcoin, and now we've been seeing Bitcoin play catch up, which is having an impact on the ETH BTC pair. Do either of y'all have strong opinions about ETH BTC, that you think it's pending a huge dumperino? I don't know what made me think of that word again.
I have no idea what that is. Don't even.
You don't remember?
Oh, no, this is from last week.
Slurperino.
That's what it was.
Oh, you were drawing this.
Yeah, this one I was drawing last week about consolidations after breakouts, not retesting, which is exactly what happened with Bitcoin. So go back and watch that. So it's a nice pattern to be aware of. I think. I mean, the BTC strength is good. BTC has been going down a fair bit from its range high. I don't think it's anything too scary or disastrous yet. I mean, if you look on the weekly, the thing's barely budged, bigger picture, So I don't want to read into it too much. I think as long as, if you're looking for the signs of health or longevity in the rally, as long as Bitcoin is bid and doesn't look terrible, And as long as like even if it's sort of consolidating, as long as altcoins don't go too far out, kind of without Bitcoin catching up, which is something we discussed a couple of weeks ago, right? It's like, is this going to be legit? Well, you want to see Bitcoin be strong and catch up and so on and so forth. And it's done a good job of that so far. So as long as that dynamic remains intact, I think that's the one to look out for. I don't think there's enough vol in ETH BTC yet to give me any interesting information. But I know Don has stronger views when it comes to kind of rotations if there's another impulse.
Ooh.
Yeah, I mean, I'm just looking at it as a big range. It's stuck in this weekly range here. It's been stuck in this since middle of 21, so quite a while ago. And I think that's probably going to continue for a little bit, but this is one of the most bullish things I think that could be happening. Bitcoin's been giga pumping the last 3 weeks, and you can barely see the red candles on ETH BTC. If you go through other altcoin charts, you'll see much bigger red candles besides the flavor of the day, flavor of the week ones. So I think this is a really good look. And I expected worse. I was pretty sure Bitcoin would regain dominance during this run, and it's done so. But it's very much come from almost everything else but ETH. And so originally I was planning to buy the dip down here, just based off of Bitcoin strength. Now, I don't really think that's gonna happen. I could still, but I think this one's the more realistic one. So if Bitcoin gets another push,
6-ish.
Yeah, 0.066. Yeah, exactly. I think because how high do we realistically think Bitcoin can go without a significant pullback, right? And if that is like, okay, Bitcoin can still go more than 20-30%, because let's be real, like if Bitcoin goes up 20%, ETH BTC is probably not going to go down 20%, as in ETH USD will probably appreciate a little bit as well. So Bitcoin would have to go like up 30%-ish, 35 maybe, in the worst case scenario, like if ETH just plays ball, and I don't think that's necessarily likely before like a significant pullback. That would take it, I would take it to 32K, which is actually like my target, but still, I don't think that's going to happen. So I'm going to be looking for 0.066, which is quite strong. And I think if once this Bitcoin rally kind of stops, we're going to see altcoins do well. They're probably going to take quite a beating until that happens, but once it does, I think it's going to be a good rotation in general, like rotating from Bitcoin into altcoins. That's what I'm planning to do anyway. It's just going to have to be from higher levels than anticipated. So I think 0.066, or if we show massive strength on ETH, just taking out these highs would be enough for me. I'd probably just jump back in ETH heavier than in Bitcoin if we just go above here, because I don't think this resistance is going to hold much longer if we test it again.
I know a lot of people, they get concerned when their alts aren't going up with Bitcoin, or I guess in this case, ETH's still going up relatively, just but nevertheless, sometimes your alts get dumped and you get sad. The change that I noticed last week is that was more aggressively so, and most visible after bad news. So the Bits Lotto thing, is that what it was called? Bits Lotto?
Bits Lotto, yeah.
Yeah. So the Bits Lotto news was like on the way. I think DOJ or some organization announced the announcement and was like, major pending litigation or something coming up. And then the market started dumping because of it significantly. Like I think Bitcoin went down 3 or 4%, maybe even more than that, because it went from green to red on the day. Alts got crushed like 10-15%, something like a real nice dump. Yeah, that was it for Bitcoin. And then when it came out, it was Bits Lotto. Everybody laughed and bought the dip, and Hisaka did a Dalai Lama tweet, and off you go. Bitcoin responded in exactly that way, but altcoins did not. And that's really where that dominance play hits the hardest, is when majors respond really aggressively to that kind of shaking off of news, and your altcoins don't. So they float up early in the rally along with, and you're like, oh, it's still maintaining some strength. And then something like that happens and they really separate quite a bit. And that's where a lot of other stuff slowed down a lot. And I was really interested to see that happening. And it gives more narrative to this potential liquidity concentration that could occur even further from at least the majority of altcoins back to BTC. And the other element of that we're seeing is like every now and then some altcoins just stands out, but for a reason. It's not like floating with the whole market. All of these things are really, really good signs of market health to me. This is Lido's one, and then the other one is Aptos. I don't know if you've been watching Aptos.
Yeah.
Really, really stood out. Like this was basically I guess every investor must have shorted it when it came out, and now it's the largest layer one because they got just turbo squeezed. It's gone from $3 to $12 in I don't even know how many days. Not many. What day is that? December 30th.
Yeah.
That's so
24 days.
24 days. This thing's like 4x'd, and I can't imagine. I can't imagine that there are not some investors that are getting absolutely wrecked in that, who are trying to hedge a major win on list because it came out with the high FTV or whatever. Everybody assumed it was going to go down 95%, and now it's pressing above the highs, and the FTV is bigger than Solana, AVAX, Matic, everything, all of those. So congrats to the Aptos players. You won. I do think this trade looks like assuming the funding and stuff can start to reverse, and whoever's gotten squeezed in this, once they are fully squeezed out, then I think it's going to reverse pretty significantly and actually open up a trade in the other direction. But I really don't know all the details. Do either of you know anything else about it?
No idea. I mean, usually these kind of things go in 3 pushes. It's had 2, so I think there's a third one, weaker one coming. So I wouldn't like, if I'm looking for shorts on this, it has to have done like basically 2 pushes and then 1 exhaustion push that doesn't really do anything and that gets faded. So I wouldn't necessarily short it now, but yeah, I do agree. Like at some point, stuff gets weaker again. I mean, it's the same with Solana, right? Solana's had massive pushes, and now it's run into resistance, and it's been lagging other like massive performers a little bit. But yeah, I think like 1 more push would make sense. But I have no idea what this is. Like Cred and I talked about it, I think on last show, like on last week somewhere at some point, and I was like, is this like an AI thing, or is this like I didn't even know. So yeah,
it's the new layer 1 with less SAM in it. It may still have some SAM in it, I really don't know, but there's a couple layer 1s coming out, and apparently that's still a trade that exists. I'm honestly pretty surprised by it. I would not have thought there were such strong legs and yet another layer 1. But here we are.
Yeah, I think is a lot of the time fuel can be created during the course of the rally as people sell it. So even if there's no prevailing narrative at the time, kind of the funding rate becomes the narrative, so to speak. Especially if it's squeeze season and your basis is all out of whack, you pretty much paint the target on your back, narrative or not, just from a market mechanics point of view. And I think we've seen a fair bit of that. And we've seen that in the dispersion of the best performers as well. It's not been like super sectoral. It's kind of been all over the place, which is telling. One thing I do want to quickly mention about ETH is I'll be pretty surprised if we don't poke above this 1680 double top, just to see who's hanging about there, in their trench coats, because that would be a very weird pattern not to poke through. I mean, markets just like to do these things, poke and prod. And we've got a really nice daily big swing point at 1680. I'd be keen to know who's hiding there. Essentially, maybe it pushes to this weekly level at 1760, and then we can figure out if there's going to be some sort of trap or stitch up in the short term. But I mean, those kind of price structures don't really stay intact for super long. Kind of back of the napkin short term idea. I think if the market wants to dip into this consolidation, I might try to buy it, and just to see who's what's above us beyond the clouds.
It's roughly 1500.
Yeah, 1500-ish, which is the pre-breakout consolidation. It's the classic sort of impulse consolidate impulse pattern. If it wants to come back there, that's at least the first daily support, and then I'd be curious to see what's above those highs. But that would be a very weird way for the market to just keep those in there. So I don't think it'll be there for super long. But otherwise, I mean, ETH looks pretty reasonable, all in all. I talked to Don on Friday about sort of monthly levels, because at least on my sort of personal charts, a few of them, Bitcoin and ETH have reached those. So if there's going to be any type of pullback or slowdown or consolidation or churn, whatever you want to call it, I think the next week or two is like a decent spot for it. For ETH, it's this 1680 handle on the monthly, which is the highest monthly close after the summer dump, and that's contained all of the price action we've had so far. So that's kind of a curious spot. And for BTC, it's pretty much the equivalent structure at same candle. The first bounce, the top of the range after the summer dump, comes in at 23.3-ish. So yeah. So again, the relative risk to reward, and I think even the likelihood of really aggressive continuation, you at least at this point have to entertain the idea that maybe the first test won't break it, because we are pushing up against some of those boundaries now. So a bit more defensive in the next week or two, unless it just turbo teleports, and then I'll just treat it as a breakout until proven otherwise. Which I think is that sounds very like primitive as a trading style, but it gets rewarded in crypto. And thing is, when the breakouts do fail, you tend to get a fair bit of time. Like the moves that follow are massive, and you do tend to get a fair bit of time to actually take advantage of those. So I think Don posted that bell curve meme about the breakout is real, and then the 100 IQ is like, oh no, it's this, that, and the other. But even if you like trading failed break and deviation setups or whatever, they're only really valid or triggered once the breakout actually fails. Once you have evidence that the market didn't accept those higher or lower prices, and then it gets back within the range, typically that's your trigger. So even if you do take that sort of skeptical, if you like, view of markets, that you shouldn't trust moves through value areas because they're like to be deviations, even with that frame of mind, if you see a breakout, it's still a breakout, until it isn't, so to speak. So I think that's something we forget, but it's I don't know, it seems a decent principle to adhere to overall.
I have something that I want to show that it might be a bit silly, but I'm going to do it anyway, which is just trying to get better confidence in what's going on in a longer term trend. So I took the candles off, and I took the faster moving average off, and I'm just looking at a 200-day moving average. And in a market which has really had very few cycles, this is ETH. And some people more so than like, where is price relative to historical average, which is what the moving average is. What is the slope of that moving average? And it's not a bad cycle indicator. I guess this is basically what a guppy type chart does as well. It just like stacks a whole bunch of different time frames, and when they start twisting up, guppy becomes bullish, and whoever on Twitter loves those starts talking about it. But we've seen both in ETH and BTC the 200-day moving average tilt up, meaning the people who have, if they've DCA'd every day for 200 days, they're in profit. So you start to have a little more potential sense of confidence. That doesn't mean it doesn't take time. To credit your point just now, that triggered in June 2019, and there was basically no difference in price for the next year, for whether you took advantage of that or not. But I do actually just find it interesting, and it's happened on both BTC and ETH. One, it looks like a measured bear market relative to what we had before. And then two, we've seen this start to turn up. And it would still be true in BTC, even if we dumped spike below 20K, still reaching support there, and below 1450 or so, where you just highlighted for potential support for ETH. So just something that I wanted to bring up, because to me, this gives some of the best evidence, at least personally, for having greater confidence in continuing to average into the market and be relatively confident about that pricing.
Yeah, it's an interesting way to look at it, for sure. I also think at some point, it's important to have in the back of your mind, like, what's the worst case scenario for like this entire move? Because contextually, we're really at the start of the year, right? It's the sort of the first 3 weeks of January. I mean, the macro stuff seems better in general, but not necessarily fixed, whatever that means. Even if the sort of rate hikes incrementally get smaller and then pause, it's likely that the Fed keeps them there for a while. I've also seen a lot of speculation about the lag in the housing market and some, indicators which are predicting recessions but are lagging by 8-9 months, all that type of stuff. So the thing is, if you just purely trade and view crypto as a kind of secular momentum type of asset, it's really tricky to keep any of your profits, because like when this thing shifts, it'll like squeeze you to infinity, right? It's really tricky. So in the back, so some of my, like when I speak to some of my shorter term trading friends who are like really bullish in the short to medium term, I always troll them with this home brewed meme I made. And the famous Marx quote, or at least it's attributed to him, that there's a specter haunting Europe, the specter of communism, right? I've sort of rebranded that to say there's a specter haunting crypto, the specter of the yearly open, which is something you'll recall that we talked about like pretty much at the yearly open, that a lot of the time the market does sort of spend more time forming the candle, both the high and low. So, and this applies to the yearly, the monthly, the daily. Whenever you get like a big drive from a high time frame open, a lot of the time that does get backfilled, or at least comes close, usually backfilled if you sort of fade it at the appropriate place. So I guess in the back of my Duma mind, a reasonable FUD scenario would be that. I mean, everything would look pretty horrendous, but I haven't completely cleared it from my mind yet. But I think it just as a random curveball, it does speak to a broader point that you just have to take the market for what it is. Because in the past few weeks, I've seen an insane amount of almost unhinged, maybe that's a bit too harsh, but there's been some really sort of creative speculation about these recent market moves. It's like Binance cartel, Saudis, this, that, and the other, some institutional PWAP, and people have just come up with very creative narratives to assign to the market, which can be tempting. But if it stops you from sort of making rational decisions and addressing the market as it is in front of you, then it's probably not the best thing to do in your own trading, right? So I think while a lot of these narratives can be comforting as far as, the market's only going up because of X, and when X goes away it'll unwind the whole thing, if it doesn't really give you like an actionable invalidation, or you can't falsify the thesis or do whatever else, the only reason I'm mentioning it now is because it's been more prevalent than ever in the last sort of 2 weeks than perhaps I've ever seen it before. It's almost like a new version of tethered trutherism, for lack of a better comparison. And that's historically not been the best way to look at markets.
One of the things, go ahead, Don.
It's kind of hilarious to see it, right? Because most of the time, at least in the last 2 weeks, it's been, this is why I'm not buying, basically. Like I've seen a lot of people say, hey, this market is manipulated. It's kind of funny that people talk about market manipulation when it goes up, and when it goes down 90%, there's nothing of the sort, right? It's just natural selling, but unnatural buying. It just like makes no fucking sense. But it's been a justification for people. Like, look at this, it's manipulated, I'm not going to buy it. And to that, I'm just very confused, because if like with these kind of conspiracy theories, right? Like if I actually believed in that, I'd be the first one to buy, because I'd be like, hey, these people, they obviously want to make money, right? So if this conspiracy theory would be true and them market manipulating and they're like deep in it, then the best thing you can do is just take advantage of it, not run away from it. Or in like, if you're not like into that kind of like trading game, just like sell everything, withdraw your stable coins, and just go to the traditional markets. Because honestly, there's been a lot of trades in the traditional markets that have been really interesting in the last few weeks. So I mean, it's not like you're lacking for choice right now. You have cryptos pumping, cryptos going crazy. You have traditional markets that put in like 50%. Like, I mean, I've been looking at Meta for like a while, was trading below like, or at 90. Now it's trading at 140. I mean, this is just insane kind of behavior. Right?
I mean, it was a value stock, like very much so. The price to earnings was extremely cheap at the lows, and people hated Meta, and it
and now it's up
naturally.
60%. And that's
Yeah.
like, it's not a crypto, right? So like the risk here is much, much lower. So I don't really get why these people are sitting on Twitter tweeting about how it's all manipulated, instead of like either just calling it quits or trading with the perceived manipulation, which I think is bullshit. But
it's called cope, Don.
yes.
Coping mechanism. Y'all both talked about macro a bit, and before we go too far off the market manipulation game, I want to talk about some of the most manipulated assets in the world. And I think I think there's whatever market manipulation can be achieved will be achieved by someone in any asset possible. Because if you can force the outcome that you want to see, then you will try if you have a position of power. Anyway, so yeah, market manipulation people, I believe you.
Is that the mission, Ledger? We're going to see this in the future court docket.
Yeah, I'm not just saying that's what I think open market participants will do if they can. Anyway.
It's a dirty word for like no good reason, right? Like if you think about it in terms of edge, if you've managed to identify a price agnostic heavy hand in the market, your job as a trader is to follow it essentially, or fade it depending on the context, right? You don't sit there and posture and say, oh, this is bad, moral and ethical or whatever. If you see someone who's agnostic and you that sort of serves an edge for you, you're supposed to trade it. So I completely agree with Don there. But metals, yeah, I mean, there've been lawsuits and stuff with regard to gold, silver,
tons.
big banks. Yeah,
these
not
happen
great
all the time. About like, that's why I brought it up. It's not like some crypto specific thing, and some traders want to ride the wave, and some traders want to try to become the wave. And anyway, I've really been just stuck looking at this dadgum gold chart, and for better or worse, but it is. Don keeps talking about this when ETH BTC is kind of tapping the highs. Like, it just looks like the type of thing that wants to go up eventually. I don't know how long it's going to take or whatever, but it just it looks like it wants to move. At the same time, I'm also seeing like, there's some potential threats to the dollar with oil being priced in other currencies. Certainly, there's motivated countries between China and Russia to not want a dollar denominate oil and other assets. And we're in the US talking right now about trying to mint $1 trillion coins to trick our debt ceiling rules. These seem like a decent recipe for store of value type narratives. And at the same time, the vast majority of gold bugs that I at least have heard have been overall disappointed with gold's ability to perform during a time of inflation. And I wonder if many of them are either hedged, underexposed, whatever. And I don't know. I look at this and I still think that 2023 might be the year that gold breaks $2,000 an ounce with some ferocity. And I guess the other macro-y thing that I would like to mention is just that I have repeated this a few times, and I'm just going to do it again. Everybody in the world acts like this giant recession is on the way and guaranteed, and I just don't buy it, because either to me it's already like midway through, or even on the last bits that we just haven't verified, or whatever they think it's going to look like and prices of everything going down or whatever, it's not going to look like that, or it's going to be way worse. And just to say like, oh yeah, we're about to have a moderate recession or something like that, I just don't buy that. I don't buy that outcome. I think it's going to be way softer of a landing, if you will, from an asset prices perspective. Or if things really do hit the fan, then it's just going to be way worse or way longer than anyone anticipates. And all of this that we've been talking about is this like head fake to the upside before much more brutal selling for all kinds of assets. But my general idea is still this stagflationary argument, where asset prices don't get near the impact that you think they will, because I'd rather own the S&P than dollars, but at the same time, our economic growth or whatever else can't really sustain. And my working theory is basically that real assets, real yield will perform fairly well. And I actually think that's a reasonable environment for Bitcoin and Ethereum potentially to do okay. Sorry, that's my monologue.
I agree, though. Like, just in general, people I've been at the bottom, the one thing that I heard most, like I think like 80% of the tweets that I got directed at me were like, but macro. And it's like, these people didn't even know that the S&P existed. It feels like just like 5 years ago. And there's a bunch of people that are now experts, like perceived to be experts and know exactly how this is going to play out. And every time you ask like, okay, but how would this actually play out? Right? Because I mean, the markets are forward looking, right? So I mean, once you kind of get a pivot of sorts, people are just like, oh, we're gonna have to wait for the pivot, but traders are just gonna be sitting there anticipating the pivot ahead of its time, and then they're gonna buy when they think it's likely, whatever. It's just like, it's odd to me where like a bunch of people just think they can have a massive edge in one of the hardest markets to trade, which is kind of like the S&P or like the Nasdaq, or in general like the stock markets. Like crypto is so much easier to trade, and suddenly we have a bunch of macroeconomics experts. I just don't buy it. So I'm
offended as a macroeconomics expert.
Yeah,
I can't remember how recent of a like one of the more significant kind of recession environments was, but maybe not the Great Recession. I can't remember. By the time the earnings were bad and were backing up the numbers, the stocks had already bottomed. So it's like earnings were coming out and they were terrible, and prices were going up because because markets are forward looking, to your point that you just made, Don.
Yeah. So I mean, I think if a lot of people that have no idea what they're actually doing agree on something, you're probably gonna like, this is the story of crypto. And it's kind of, given how popular trading has become in the last few years, it's kind of become the story of the S&P as well, right? If you just kind of mark out the crowd's opinion of this thing, I think it would just line up with bottoms and tops perfectly. Because this is, I think, a chop market, right? In chop markets, just like you kind of get these inflection points where people just lose their shit and then they lose their money. And yeah, I'm just looking at this thing and it just looks good to me. Like the S&P
looks good.
Yeah, it just
looks
good.
So good.
We've reclaimed horizontal resistance, turned it into support. We tested it last week, didn't manage to stick it. We've been trading, and I tweeted about this last week too. We've been trading above this like trend line. Depending on how you draw it, we're either significantly above it now, or basically just trading a little bit above it. But I think this trend line is gonna go, and it makes sense to me than to just head higher, just TA wise. So that looks good, and also looks good on the higher time frames, right?
Yeah.
We've talked about this before. Like this entire area is where I expect the range, right? And that's exactly what we've been getting. We've been trading in this for months now. I don't think that's going to change anytime soon. If you want like a comparison, just look at gold, right? When it like put its top in, like back here, where you had like this kind of like, you had this top here, and then you had a massive range after the drop. I think we're going to do something similar, just obviously not as big. And then we're probably going to do the same as in make new highs. But for now, like, I don't really care where this is going to go after this consolidation. I'm just expecting chop. And then that's going to help me in kind of finding areas where I want to do business in crypto at. Like right now we have tailwind, given the S&P looks good. So it makes sense for me to just stick with my positions. If we start getting into areas that I think are dangerous on the S&P, and we've kind of super extended on Bitcoin and on the altcoins, I'm more than down to just kind of like take some profits and then rebid or do whatever. Right now, I'm not seeing any of that. We're barely above resistance. The S&P has barely started moving up, and Bitcoin's already been like running hard, so I'm not willing to change anything.
This is not to say I think we're going to break 24K right away, go to 30 to 32, whatever, like super fast. But there's a couple things that make me believe that the potential for more upside and like setting up a future trap from higher has some likelihood. One is these squiggles still are alive here that we've talked about, this potential kind of long term. I mean, that goes all the way to like June 2024. If you just continue that as some kind of pattern, similar to some of the ones we've had in the past, but nevertheless, those are just squigglies. I want to show the NASDAQ because this is starting to turn some really long-term moving average type stuff, potential pattern recognition. And these things really do matter. This is like the type of moving averages and things that you recover at the end of, you know, deep, long recessions and bounce off of in things that aren't quite recessions. And we're flipping this, you know, 200-week moving average on the NASDAQ. And I still don't know that I want to own the NASDAQ for like the next 10 years. But even though my base case is it probably won't perform as well as the S&P, it wouldn't surprise me if we got like a quarter or something where it moved actually quite strongly, because now people are like so out of it. You know, they've carried on to other things, and that mean reversion trade that you were talking about, Don, could occur here, and you actually end up with, you know, a couple of months that are quite strong in that asset class, and strong enough potentially to lure people back in at the time when they shouldn't be. And then you get that rotation back to, you know, the safer plays in this type of economic environment. But yeah, so this is clearly lagging versus what you just showed with the S&P. Like, it's just not near as strong. Or like, here's the Dow Jones. Like, this is only, you know, 20 something, 26 or something large caps, and this is obviously much stronger than the NASDAQ. And the NASDAQ is where retail got absolutely clobbered. So seeing them finally capitulate that, you know, their tax loss harvesting at the end of 2022 and things like that, and it wouldn't surprise me if we got a deeper positive retrace there, and that could coincide as well with you know, our altcoin moves or whatever we're trying to associate from a risk perspective.
Yeah. The thing is, on the macro thing, it's like, if you're using macro to inform your view over 6, 12, 18, 24 months, that makes complete sense and it's completely reasonable. If you're using macro to ignore significant short-term momentum trades, that makes less sense to me, because by definition, those momentum trades, if they're well designed, are going to be constrained by time and price. So they're a completely different creature, but they're also very compatible, sort of one with another. Even if you think macro is completely terrible, you know, and your system is printing very strong 1 to 3 week momentum signals, I think you'll be very short-changed of opportunities if sort of one denies the other. You know, it's almost like a category error, I think, to suggest that, oh, the market can't go up for 2 to 4 weeks because the 6, 12, 18-month macro outlook is really bad. That to me is like a slight stretch. I think you can get away with it, and it doesn't matter whether you want to call it like an echo bubble, counter trend, bear market rally, this, that, and the other. Those are just words, right? They don't really mean anything necessarily. At the end of the day, it matters like what you trade and how you trade it. And so if you have an edge and a really good idea over a fairly short time course, and again, with pretty strict, as with momentum trades have, time and price-based invalidations, I don't see how even a pessimistic, larger time frame view should necessarily negate you from taking those. You know, I think you can do both and not lose your mind completely. I mean, on the macro thing, but the only other funny thing, which I think I've said before, is, as Don said, a lot of the people who now have great certainty as to how macro will resolve, whatever that means, were the same people caught blindsided by all of 2021, essentially, right? Or 2022, whatever. So like when macro turned and the entire industry was caught with their pants down, there's like a large overlap of those people caught with their pants down then, and who now have a very high certainty as to how everything is going to go, you know, tick by tick, which is something to be skeptical of, I think.
Yeah. None of my friends are asking me about crypto anymore. It's usually bullish. I don't know.
Yeah.
What else y'all have on your mind?
I mean, my girlfriend's mom's been telling my girlfriend that she's worried about my job security. So
when they're worried, that's always the time.
Oh yeah. I mean, she did start doing that at 16K. When FTX started blowing up, she's still very much not sure, which is quite funny. But yeah, it's a good sign, I think, for us all.
Do you know who I am? I'm Crypto Don Alt.
Yeah.
I'll let you guys know once she starts asking me how to invest, and then we're gonna take some profit.
Oh man, counter trading our mother-in-law now. Good. Well, Cred, what's on your mind? Anything else?
Anything else? Not really. I think I'm actually going to shift my focus. Like the daily range served me really well, especially this sort of continuation leg after the most recent consolidation. Like that was good. I think in the coming, as far as big picture view in the coming weeks, the monthly time frame to me is going to be about as clear as it gets. I can almost do my sort of equivalent version of Don's label chart, which is essentially some version of the following. Let me make sure I'm still sharing my screen. Yeah, okay, here we go. So this is the top of the monthly range, right? Sort of at 23K. If there's some sort of stitch up here, such as, market tries to break it and basically isn't accepted back above, I think that would be the first meaningful trigger for a pullback. If the market does pull back in a visible fashion, the area that has to hold one way or another is around 20, 22K, 21K, however you want to slice it. What you could do if you want to get jiggy with it, as the kids say, no one says that anymore, is actually cut up this into a new range. You've got the highest close of the small bounce after the nuke, and then the lowest close of sort of the lows, basically. And you can see that the midpoint cuts right through at about 20K, right? And so that you've got a lot of confluence at that type of level. And then in terms of upside targets, if you want to take the, basically 3AC gap, minimum sort of 26.7K. And if we're going to be consistent on the monthly, it's closer towards 28.30 or whatever. And that gives you a fairly clear trading plan, I think, at least from like a high time frame spot allocation, whatever point of view, which is that if you get stitched up, trapped, if there's no acceptance above 23, 24, and the market starts to visibly pull back, one way or another, through heaven, through hell, it has to hold 20K. Now, whether that means it goes for like a shallow pullback into this consolidation, it has to spike the lows, goes deeper, whatever, on a high time frame resolution basis, that sort of large inflection point, summer range, midpoint, whatever you want to call it, has to hold. Because back below there, we're fucked, right? So that becomes a very clear line in the sand in terms of directional bias. So in the short term, any stitch ups or failed break stuff, whatever, above the monthly is bad news in the short term. It could be good news in the medium term as long as it holds this multi-time frame, 20, 21K, however you want to dice it, support. And if you get breakout and continuation, your kind of very conservative first trouble area is sort of 26.7, which also lines up with those kind of pre-breakdown highs, whatever, 25, 26. And then the Don main character targets are sort of 28, 30 or thereabouts. But I really think you can sort of limit yourself to essentially 3 or 4 levels, and you'll have a very good confluent multi-time frame view of how to look at this thing. At least that's my plan.
I love that candle, man. Like just close the month at 23K or so, and it's literally the up only logo.
And then retrace it to the yearly open.
All right. Well, I think that's it. Thanks everybody for joining us. We really appreciate it, and I hope that you'll give us a thumbs up and all that good stuff. Tell your friends that Weekly Open exists as a show. Subscribe, notifications, do all that stuff. We usually come on air 30 minutes after the market opens. Appreciate you being here, and we'll catch you next time. Bye.